On Tuesday, I opened a 1 DTE short position on the SPY. I made a video about it, and this video is a continuation to that video showing the results of what ended up happening. I wanted to record this video and publish it last night, but I ended up with an insane migraine yesterday evening and ended up needing to shut down all the charts up until this morning. This is a video here that's called Why I Opened a 1 DTE short position on the SPY. And in that video, I was going over all the things in which I was looking at, my plan for risk management, as well as how much capital I had actually allocated to the trade. It was a bear put spread, also known as a put debit spread. I also talked about my stop loss in that video, the reasons behind why this would be my stop loss and why I decided to choose the spread. Being in the spread meant I knew I would have time to wait Wednesday morning to see if I needed to stop out of the trade prematurely or not. On top of that, I actually took a look at the 1 DTE gamma exposure profile, and I addressed if the markets was to actually break above 725, I would expect the markets to go towards 750. That's what actually ended up happening, but at this point in time, I was addressing that there's no way to know what was going to happen, because if the market broke below 700, then my trade would have worked out really well. In this case here, that did not happen. The opposite happened, and that's one thing I want to point out in this video: the importance of understanding what are you going to do if your trade goes wrong. If your first idea does not work out, do you have a backup plan? Obviously you should have a plan for your stop loss, but that doesn't mean you just need to stop out and do nothing. In the Quants Trading App Discord channel before 10 a.m. Eastern time, I pointed out the first sign that I was seeing. A few years ago, I did a video on the 2-day anchored VWAP. It happens to be one of my favorite videos. You can just search anchored VWAP on my YouTube channel and it should pop up, and it's this one right here. Why does the 2-day anchored VWAP work so well? This is 4 years ago. Now pay attention to just the thumbnail in itself. You guys can see that this is a consolidation and then a gap up over the 2-day anchored VWAP. Yesterday's price action looks almost identical to that thumbnail. This is the bear flag from the day before with the consolidation, but the market actually gapped up over the consolidation. This is what it looked like during pre-market. So this was the first indication that my 1 DTE put trade was not going to work out in my favor. As I was aware of this during pre-market, I came in and shared this just a minute before 10 a.m. Eastern time, letting other traders know that the consolidation above the 2-day anchored VWAP is a good thing for the bulls. It's almost 10 a.m. Eastern time, so in a couple minutes we'll get a better sign as to if Momo will kick in. Momo is just short for momentum. So this is it right here. Not only do we have our first sign for what's likely to happen for today, but we also know when to expect price to move. Price is generally going to make some sort of a consolidation breakout around 10 a.m. Eastern time. So 30 minutes after the market opens, you can generally get a clear direction, especially if there's been consolidation. 10 a.m. Eastern time is also a time in which a lot of events, there's usually some sort of breaking news around 10 a.m. Another sign that the market was going to go up was the 0 DTE gamma exposure profile for the SPX. This is what I was saying right here was looking pretty attractive. So that 740 to that 750 area caught my attention. It was the absolute gamma strike. We saw a very clean, clear, large net positive gamma strikes. Price at this point was already holding above a key level of 720. Again, as you guys remember in the previous video, just by taking a look at the 1 DTE, this level was already of interest to me from the day before. The 0 DTE then started confirming some of that. All we had to do was just wait to see what would happen with price action. At the same time, the market ended up breaking out. This breakout was a consolidation breakout now, because we had a consolidation from pre-market as it broke out here. We also had a pattern that was forming. This was a wedge that was being created. That was a breakout here. This was a failure of a bearish pattern. So the failure of a bearish pattern is usually a strong sign for a bullish move. And the same thing in opposite. If you see some sort of a bull flag forming and then price fails to break out, it's usually a good sign that you're going to get a explosive move in the opposite direction. As per the video I released on Tuesday, I addressed waiting 30 minutes after the market opens to decide what I was going to do with the put position. And it's exactly as I mentioned, you'll usually see a 15-minute candle that will form in one direction, and then another 15-minute candle that will often take back the first move. This is our choppy 30 minutes of the day, in which there was nothing really for me to do. I did have reasons to think the market was going to go up, but I wanted to give the put trade an opportunity to breathe for a bit in case some news came out, in case something unexpected happened and the market did break down below this level, and we did end up selling off because at that point that trade would have ended up being a really large win. And at this point in time, the trade was barely down 25% or so, if I remember correctly. At this point here, the trade must have been down maybe 5%, so it wasn't really much risk. And then once we broke out above here, that's when I decided to close out that trade for a small loss, and I opened up a bullish trade for the day. The trade in which I opened was a long call butterfly, or a broken wing butterfly on the XSP, targeting that 6,750 area on the SPX. What's neat is that I was not the only trader that opened a position like this, as the clues were there early in the day. It was nice to see that a couple other traders shared that they were actually in something similar. I believe right here, Jeremy actually shared that this was his version of his trade. Again, this is not a trade idea in which I shared. It was just nice to see that other traders are thinking on their own, and that's something that I think is important. I don't know if there's that much value in just copying and pasting what another trader is doing, but if you can understand how another trader is thinking about approaching a trade, as well as what they're seeing, it means you can think for yourself and actually come up with your own strategy and your own play. He was looking at the same gamma exposure profile I'm looking at. He has access to the same levels in which I shared at the start of this week around the weekly gamma exposure levels. At this point, he's learned how to trade spreads, so he was able to devise his own strategy. This is another example here. He went with a broken wing call butterfly spread. He traded the SPX. I traded the XSP. Same risk profile, same structure. Between all three trades, we all took three completely different trades, but our risk profile was exactly the same. And again, this is not a trade idea in which I shared. This is something that they were able to think for themselves just based off the context clues around what was happening in the market. As far as I'm concerned, I was the only one in a short trade, so they didn't have to worry about managing another position. I opened this minutes a few minutes right after 10 a.m. I would have opened it a little bit earlier, but I do like to open these types of trades just right after 10 a.m. just to make sure the market doesn't do any type of strange reversal. So that's right around here on the break. Now we had some gamma exposure levels for the week. So the market holding above 670 was a good sign. This next open above the same level of 670 is showing it's holding above 670. Momentum kicked in and we broke. Once we broke above 671, this was clear confirmation that we were likely going to 672. At 672, was not sure if we were going to 673, but then once we got to 673, market struggled to go higher and ended up consolidating all day right at that key gamma exposure strike. I closed out my trade just before 2 a.m. Eastern time. As the FOMC minutes was scheduled, I did not want to hold my position through this catalyst, so I closed it out a few minutes prior. This type of price action comes right out of my volume profile playlist or course that I've released for free on YouTube. This exact thing that happens here. Price forms a bearish pattern. We see the point of control from the previous day. Then during pre-market and overnights, the market consolidates above the point of control, above all these high volume nodes. It ends up meaning that we are actually developing a demand zone down here. And then as the market opens the following day, we test the 2-day anchored VWAP, we test this demand zone, and then price takes off. Link is in the description to that volume profile playlist. When I first made it, it wasn't really intended to be a course, but it kind of ended up becoming that way as I go through different things that you should be looking at when trading the volume profile. I highly recommend you guys watch these videos in order in which they've been released. It is an excellent foundation to understand what's going on with price action. A lot of the other advanced tools like gamma exposure or other indicators like the 2-day anchored VWAP, those can become confirmation or confluences, but the volume profile is a good starting point as a trader, as it is one study that you can implement on almost any charting platform, and it is universal. I'm just going to change this off of the daily setting and put this on the weekly. So instead of a daily volume profile, we're getting a weekly volume profile. And now we can see this is something that I pointed out on the video on Monday. This level right here was last week's point of control. Once the market was consolidating at last week's point of control, it was also holding above it, and we entered back into the value area zone for this week. So at this point in here, this is where it's hard to remain with a bearish bias, because we reclaimed supports, we reclaimed a key level, and the signs were there that the market was likely going to head up to another high volume area zone. This week's point of control was up here, and that's when I shared once this broke and we headed up to this week's point of control, that was something to take note of. I was asked, what does this mean? It's just an extra confluence here to expect the SPX to be choppy around this area, so around 740 to 750. If it breaks and holds above this zone, then bears are likely done for the day. But if price struggles here and we see a strong rejection, then it becomes a level for shorts to risk off of the SPY, ES, SPX, all of the key levels. So this was the SPY, that's that key strike. The same time the ES was at this week's point of control. And we can see what ended up happening with price action. It ended up being choppy right at that area. And then once we cleared above it, as I said, bears would be done for the day. At this point, it definitely made no sense to remain with any type of short bias or bearish bias. At this point, this was likely going to act as our support for the day. So that meant a trader can sell puts below this level. It meant a broken wing butterfly was a good strategy to go with. It meant even a butterfly that had a nice range around this area, maybe a 1 DTE iron condor expecting consolidation in this area. All these are different ways in how you can execute on the trade. If you're a micro scalper, obviously there was a scalp from here to here. That's a $1 move on the SPY. It's a decent scalp on the ES or the SPX with 0 DTE options. There's likely an infinite amount of ways to execute on the same information, but the point of these videos is the thought process behind what's happening. From the day before, I already had an idea or a plan for what I was going to do after the first 30 minutes of the market opens. Price action ended up playing out almost exactly to a certain scenario in which I discussed, first triggering my stop loss at a key strike, but then instead of just taking that small loss, I knew what to do because the gamma exposure from the previous day already told me to take a look at this area up here. These strike prices up here are the 750 area on the SPX. So this is what the SPX looks like. And we can see this is 750, this is 740, and 760. So right in the middle here at 750 is where the markets ended up consolidating around for hours. Lastly, I also mentioned the iron condor that I was holding for the week. I closed this out yesterday too. I generally like to close out my iron condors around Wednesday if I open it on Monday, unless I had to manage it throughout the week or so. But if it was a painless iron condor, then I'll just close it out on a Wednesday. I got out for around a 70% decay in 3 days. Again, this trade was open on Monday and closed out on Wednesday. All right, guys, hopefully you enjoyed this follow-up video. Hopefully you learned something. And if you're new to this YouTube channel, hit the subscribe button, like this video, and leave a comment if you learned something, and I'll catch you guys in the next one.